You are listening to ChartingWealth.com for Tuesday, the 1st of November, 2016. Let's jump right in. The markets were down for the day on two of our charts, up for the day on the total market just barely, 0.11%, so just a little over 1/10 of 1%. We still have a down candle as far as our two-day candle goes, ending on the 31st, Halloween day. We see that our market is currently in a downtrend on both the weekly chart and the two-day chart. When we look intraday, what do we see on our 4-hour chart? We see down movement in the morning and the afternoon. Now again, we use Heiken Ashi candlesticks. We had our entry point there on the afternoon of the 27th, Thursday the 27th. We've had significant down movement since then. Hopefully you jumped in around that time period and have been seeing your position in an inverse fund on the total market and or the Qs or the S&P 500, depending on when and where. We'll go over those entry points again. You jumped in, and again, remember, we're talking about inverse funds to make money when the market goes down. That is sometimes referred to as shorting the market. If you've not listened to our training, Inverse Funds, How to Make Money When Markets Crash, you need to check that out on either YouTube or at chartingwealth.com or on iTunes. We have all of that information available at all those different platforms. And let's continue to march through what we're seeing occur on these charts. If you've not already listened to our weekly review and forecast, you need to make sure you do that before you get too far into the week. Next, we go into the S&P 500. It is technically down for the day, 1/100th of 1%. It's 0.01% down. Again, market rotated over going down all the way back around the 22nd, 24th. Those two-day candles started going down all the way back then. It's had a couple of up times, but it has been trending down. Weekly chart is still down. The two-day chart is also down. And when we look intraday, what do we see on our 4-hour chart? We saw a crossover going down on Thursday the 27th in the afternoon. The market's been significantly down since then. Hopefully you were paying attention to our podcast and to the charts, and you jumped in on something like SH. What is SH. What is SH? Well, that is the ProShares Short S&P 500 ETF. It's been going up since that time period as the S&P 500 has been going down because this is a short fund. It is an exchange-traded fund. It's what we call an inverse fund. And it's a way you can make money as the market goes down. Now, keep aware of this as you continue to train with us. Again, we're not giving trading advice. The caveat with everything we do here is we want you to open up a virtual account at one of the online brokers, and we want you to trade, practice trading, investing, make yourself a virtual millionaire, and then start buying and selling, practicing. And once you get good at that, you can make up your own mind to do whatever you want to do with your own money. We're an education firm. We are not a stock calling service. We want you to learn how to read these charts. Then you can make your own decisions. That's where we are on the S&P 500. Now we're going to go to the Qs. What is the Qs? Well, that's the NASDAQ 100. What does it look like as we zoom in? Well, the NASDAQ 100 on the two-day chart is actually down also. So we have the weekly chart on the Qs is down, and the S&P 500 is down. Actually, it's been going down since on the two-day chart since the 26th of August. Now, the weekly chart has not been going down that long. In fact, the weekly chart just rotated over going down on the week ending the 21st. Interesting how prescient that's been, isn't it? You could have jumped in. Again, if you were a long-term investor, again, practicing, you could have jumped in sometime around there. And it's so interesting as we watch things continue to move, how these weekly charts can be so valuable for us. Now, as we go and we look back earlier in the year, around, again, those summer doldrum months in June, we had a bit of a dip, and then the market took back off again. But again, you have to pay attention. That's one reason we use the weekly chart to set our trend. we then use the 2-day chart for not as a long-term a trend, but also a confirming trend. Then we wait for a rollback on our shorter chart, and that is where once that rollback finishes, as it did around the 27th on the Qs, we then felt much better about getting into a down movement. We had not felt good about getting into any down movements prior to the weekly chart actually rotating over and going down. The market had been trending up, even though the 2-day chart since August had been down, because the weekly chart was up. Even though we had a shorter term downtrend, the long-term trend was up. But now we're in a long-term downtrend, so pay close attention to that. That's why we like to have our double long chart, that is the weekly, our long chart, which is the 2-day, and then our short chart for a pullback, which is the 4-hour chart, and then a crossover going down. And once that occurs after a pullback, that's when we look to jump in. That's the safest time to jump in. So that is where we are on our 3 indexes. Now we're going to go to gold. Gold is getting very close to crossing over, going up on our 2-day chart. Still in a weekly downtrend, but we've broken that trend line as far as the weekly chart goes. We haven't had a confirmation with the weekly MACD crossing over, going up, or now we're using the PPO, the price percentage oscillator, which is the MACD, except instead of using price, it uses the percentage of price, and it's getting very close to crossing over. If we look at the 4-hour chart, which has been our real trading chart when it comes to gold, still working like a charm, crossed over going up in the afternoon on Wednesday, the 12th of October, slid sideways for a while, chunked up around the 18th and 19th, then sideways and down a little bit until the 24th, up on the 25th, and then in the last few days has started moving up again. We've seen a significant narrowing, though, as far as volatility goes. So again, just continue to watch this 4-hour chart. Pay attention to what's going on with the PPO and the signal line, and also that derivative oscillator. But gold continues to move up for the day, 0.28%. It was the biggest moving of all 4 of the ETFs that we follow. Folks, that's where we are for the day as we end the day on Monday, go into Tuesday with a new month hitting us, the 1st of November. Holidays will be coming up soon. So again, pay attention to what's going on. If you haven't listened already to our weekly review and forecast, do that. If you care about what we do and appreciate us, we ask you to give us a little payback. Go to iTunes, give us a 5-star rating, say something nice about us. Also, go to our Charting Wealth YouTube channel and subscribe. Thank you so much. We love to hear from you at chartingwealth.com. Sign up for the newsletter. With that, you'll get, of course, the 3 freebies we always offer. That is our How to Read a Stock Chart video, 15 minutes that you need to understand for free how the market really works when it comes to being able to read a stock chart. This is your primer you need to jump right into things and start figuring out what's going on. You'll also get the layout that we use at freestockcharts.com. It is our layout from Charting Wealth, and of course the operative word there is free in freestockcharts.com. You'll also get our daily market worksheet that will supercharge your learning and your progression. Thank you so much. God bless from chartingwealth.com.